Yeah. Which one? Okay. Yep. Yep. All right. Welcome to. Yep. All right. Welcome to Trade and Wait, aka many other things. I'm going to review price action so far for this week. Today's Thursday, July 9th. I don't have a lot of time, so I'm going to try to run through this as quick as possible. Anyway, let's document what we do know. Let's document what we do know and take it from there. I'm just going live because I don't want to have to upload anything later. All right, so let's erase everything, all the drawings, and we're just going to document what we do know prior to this week here. So we have the previous week's high. This is a 4-hour chart. This is the MES and previous week's high. And we have, technically it's here, previous week's low, Sunday. Previous week's low. We have this swing low here. We have these stops being ran right here. I don't want to get into this week here, so I'm going to try to focus here, right? So, and we have a swing low, relative equal. I think they're equal lows, right? Equal lows right here. So we're just going to call that sell side liquidity there. And of course, we have this wick. So we kind of like if price was continue lower, then we would use quadrants, quarters, and then we would drag that out, right, like that. Personally, I would have to flip it for myself. That would bother me, having the 75 up there, but that's just me, right? All right, so you can do that just and see, like, looking for key levels where price is going to hold. We also have a breaker, which in general we don't focus on breakers too much, but a breaker is a low high and a lower low, and then you take the up close candles, and if you did that, then you can drag that out. But you're going to focus on inefficiencies like wicks, fair value gaps, and like volume imbalances, right? That's our primary focus. And so you're going to look for any inefficiencies. This is all like balance. I'm trying to avoid not looking at this week, but looking at trades during this week, right? So it's like levels and inefficiencies in this price leg are relevant, right? Are relevant right now, including this previous week's high. So I just put, when it's 2 weeks ago, I just put ×2, and that's how I know. It's always going to be like the same color. All right. Anything else here? It's kind of like highlighting this bearish fair value gap, which caused price to go down here. We kind of trade back into that, then we can kind of anticipate some type of reaction. Maybe price will hold lower, treat it as resistance, or trade above it, above the midway point. Then we can kind of consider price taking out this swing high or this swing high, something along those levels. But actually, looking back further, then you have the same situation here as well, right? This is what I mean, the fair value gap that I'm highlighting. And the other one is here, right? Because this caused price to go down here. This fair value gap bearish caused price to go down here. And that's all I'm referring to. All right. So we have two setups here that meets the criteria, right? But we want to identify key levels on this time frame here. Let's not do that. And for now, let's just turn that green, right? Bearish fair value gap with support. It was support here on this bear bar, support here. It was support here, traded below 50%, reclaimed the upper quadrant, retest here. So this is a key level, right? Key level. This is key, right? We have this significant displacement here, and we have price trading back through it and going back above. You can choose this as an inverted fair value gap. It's inverted here, and then it's a reclaimed bearish fair value gap here. Or you can choose this one here, and both pretty much gives you the same type of analysis. So you have in the fair value gaps, not every gap is a fair value gap. That needs to be noted as well. But anyway, we have this bearish inefficiency here, and we have it being resistance here, resistance here, resistance here. And then price pushes through, right? So now it's an inverted bearish fair value gap. By definition, just the fact that it was supposed to be bearish and that it was violated, it lets you know that, hey, the market wants to go higher in and of itself. So you can either have targeted this high, but we're going to target the low-hanging fruit first, which is these relative equal highs here, and then this swing high here, and then ultimately here, right? But also you have to think about, I'm going to erase that because I want to do something else. You want to think about price of running this swing high here. Here, that's a false breakout, right? False breakout above this level, false breakout. And in general, right, support, resistance in general, right, kind of want to anticipate some degree of a retest of the level that was broken. So it didn't get retested until here, right? So price false breakout above, trade it back down. We have a fair value gap here. All right, and you can drag that out as well. Maybe I should have. So that's this was an inverted bullish fair value gap, violated, went lower, and now it's possibly a reclaimed bullish fair value gap, but we need to see. But anyway, there's two setups, a short setup and a long setup, right? Around this high, around this low. So let's talk about this first, and then we get into this one here. So this first one, we're going to use this yellow box. Let's make sure that all of everything is going to transfer to the lower time frames, current interval and below. All right, so that's two. Nothing else should be on the chart. So we spoke about this. Let's just make this uniform with the box, with the rectangle. All right, so let's go 15-minute chart because that's my sweet spot. Anyway, this delineates the start of a new week. This is definitely Sunday's price action right here. So we're gonna put this on so we can see midnight open, everything's midnight open. So this is Monday. Indicator can actually put the days of the week. Okay, so we have that down here, Monday, Tuesday, Wednesday. Today's Thursday. And actually we can do this. We can make this 4 hour, leave it there, and we can work off of this chart here. And let's just make that like over there. All right, so start of the week. Let's make sure everything. Oh, another thing we could have done was put the ATR channel, 3 ATR channel. This is the 30 EMA. You can use the 20 or whatever. Right, doesn't really do much of a difference. Anyway, so that's the 30 EMA, and we can see price here. This is technically like oversold, overbought territory. Apologies. And then down here is like oversold, and you can just see that just based off of premium and discount. What do I mean by that? I got like what I mean by that is that when the market opened over here, right, Sunday, what's the range that price was in, right? That's what I mean. So price was in this low to that high, right? So 50% is here. It broke above. So this is internal range here. They got this bullish fair value gap. Bullish fair value gap here. Price traded into it. So that's internal range, right? Because it's inside. Technically, it's inside of 2 ranges. It's this range and also prior to the pullback is also inside of this range as well. But anyway, price pull back here. So we got internal range, target and external range. So took out this high, it broke out of this range, and then it broke out of this range and pulled back in. So let's get rid of that. Right, and you can see that that's the range that price is traded in. Ran the high, then turn around, ran the low, right? All right, so, and what we can do, what we don't necessarily, let's talk about, so these are like, you could have called this entire range. So you want to trade in the direction of the higher time frame chart. This is just, for me, is for market direction, order flow. And I want to look at the 15-minute as my higher time frame for the daily, for any type of scalping or day trading. But you can also enter on these charts trying to seek the entire range of this 4 hour chart, right? That would be your short-term trading, your swing trade, 1 or 2 days, 1, 2, 3 days, something like that. So this is this happened on Monday. The exit was on Wednesday, right? During the London session, gave you another opportunity once the market opened, normal trading hours to get out and re-enter another position. And again, both of these are purged, like off false breakout. So false breakout here, false breakout, or breakdown right here, right? So where is the entry here? Multiple entries. So remember the swing high, previous week's high inside of the yellow box. So that's what we would have waited for. The yellow box. So this run up here, let's see. So this right here is relevant to, this is Friday's price action. You can take this off because price never went down there. So you're not going to entertain that. So price Sunday opened up here in this range. This is Sunday's price action. We have this bullish fair value gap here. Bullish fair value gap right here. And technically, I'm not going to get into that, but you can technically run that all the way through, right? If you wanted to. And let's put this back up here, right? All right, so price opened up, it was inside of Friday's range, Friday's price action range. And we have the similar situation, purge. We got the 1, 2, 3 drives pattern, right? Reversal up, ran this low, pull back, another pullback, return to origin, ran these lows, and then took out all those highs there, right, into the previous week's opening price. You see, like today, it traded into the previous week's high right here. Those are that retest we spoke about. But where are we now? I gotta be done in like 10 minutes, 15 minutes max. All right, so you have this bullish fair value gap here inside the previous the Asia range or the aftermarket on Thursday. Am I tweaking? Oh, Friday was a holiday, right? Am I right? Yeah, it was the 4th or whatever. All right, so that's a correction. Apologies for that error. There's this World Population Day. What is that? Friday was the 3rd, treated like a holiday, right? Let's put the days of the week back on here so I can make less errors, right? Definitely going to make some mistakes, and I can't control everything, right? Can't be too aware all the time. But yeah, so there you go. Thursday's price action there. I just love this chart though. It's beautiful, right? Like, all right, so we got this low. We got this market structure shift here. You got this bearish fair value gap here. A balanced price range technically. Push price back down to run these relative lows here into this bullish fair value gap. And that's optimal trade entry long. So we use this high, use this low and this high, and then we anticipate some type of pullback. Let's just use the numbers. 61.8. You can stick the 70.5 in there if you like. All right. But anyway, I'm looking to get in the 61.8, and then we have an entry here, and then the run up. This is the market 9:15, 9:30. Like Judas swing, took out these lows. Market structure shift again here. Price pull back down. And if it's not clear on this time frame, then it's okay to use the 4-hour, the 5-minute chart, the 5-minute chart. But so we got a purge, and we have this high here. So we purge, created the high, which technically ran this high. So this is the market structure shift. This is for Monday. This is for Monday's price action. Probably doing the most right now. So this is your market structure shift here. Not up here higher. And that's your market structure shift. And I shout out to Zusi for highlighting this for me. For me, like he didn't teach you guys the same stuff. But anyway, because this bearish fair value gap is here, then this swing high is significant, right? Technically this one, and then also this one. So when the price ran here, then I can trust that this is a market structure shift. This would be where your stop order would be. Right there, because it's different now, right? So we had that entry here pre-market, and now we're stalking this entry here, right? So that low, and technically you can do this high below 50%. So it's not optimal trade entry, but it does fit the model. The model is price retracing below 50% back into in this case, a discount into PD ray, this bullish fair value gap, or this inverted bearish fair value gap, and then proceeding higher. And you can see here that this is a key level, right? This was indeed the market structure, the price like that caused a market structure shift, because here price is retesting it, and then price pulled back down into it to retest it again, and then it pushed higher into 2.5 standard deviations. Really, we only look for 2 standard deviations, and that's literally just duplicating this low to this high twice, right? There's a lot to talk about here. Anyway, and again, let's erase that. This Monday. I wanted to talk about today, right? And then we're going to talk about the dominant move here, then try to get into the dominant move here. But anyway, so we got this high, and the same conversation. This bullish fair value gap is here, and then you have this swing low. So the moment that technically this swing low is broken, that's your market structure shift. That is a moment to anticipate some degree of a potential reversal. So nothing here is guaranteed. So market structure shift below this swing low because of this gap here. And yes, it traded into a bullish fair value gap, and you can count that as well. Then you have to count this inverted bullish fair value gap. It's a lot of work, right? Anyway, so you have this this high. That's the high prior to the market structure shift. So it'd be this high, and it would be this low right here, and then a retracement. And that's not clear. It'll be clearer on the 5-minute chart, but you don't necessarily have to do that, right? So swing high, swing low. Now it's clearer, right? That's the low that broke this swing low in this optimal trade entry. You can try not to put all the noise on the chart, but same, right? Protective stop at the high. This is an alternative entry. This is the ideal entry, but 61.8, you want to make sure you get into the trade. This is about a 7 point spread. 7 point spread. You have to think about the math of trading like all the time. Like this is your R, this is your risk profile. And if you are anticipating, like what type of entries are you looking for, right? You have to think about, will it potentially give me 1R, 2R, and that's all of that's fine, right? But it's whatever you are looking for. So I'm just gonna throw this up here. So let's say 61.8, and then the protective stop is here. And you can see here, that's a 1. This right here would be a 1 to 1. So this range, this is how much you risk. 6.75, almost 7 points. This is the MES. So every tick is every dollar move, every point is worth $5, right? So 5 times 7 is 35. So you're risking like per one contract would be $35 risk, right? And you get 35 here, right? So 35, 70. And that's per one contract. So you got like, let's say you have a fixed what do you want to call it? A fixed R, fixed risk amount that you risk every day or per trade. Let's say it's $200, right? So $200 per one contract, and that's 35. In this case, 7 points, right? 35 times whatever gets you 200, right? So let's say that's 6 points, whatever. It's probably not, but whatever. Let's say, so that's your limit. You can only use. Let me just do the math for you. 200 divided by 35, it'd be 5.7. So you can only get 5 contracts if you're risking $200 in this particular trade, and your fixed risk is $200 per every single time you trade. So you're risking $200 for $200. So at the end of the day, you get $400 here, right? It was 1-to-1, right? And you're only using one contract, for example. But in this case, you could use 5 contracts in total. So 5, you can do the math on your own. Just multiply everything by 5. And that's 1-to-1. This would be your 2-to-1. I'm not going to be accurate. So this is about 2-to-1 here. And I think I took off the, so we got here to here, right? This swing high, this swing low, retracement, right? And we have, it didn't quite reach 1 standard deviation using this. Oh, yep, using this, where we are now. So let's leave that. All right, so 1 standard deviation, that would be about 4R trade. So that's really, really exceptional, right? Back inside of this green, this bullish fair value gap on the 4-hour, this will be your target. You just get up out of there. That would be your 2-hour trade. That's pretty good. Expecting price to hold here. Definitely bounce there, right? Definitely bounce there. Retesting this swing low here. Failed on this time frame. Imbalance. Dropped again. Let's go back to the 15-minute chart. Right. So this 15-minute chart for me, so you got the bounce. It didn't do much, right? Just kind of traded back here and then proceeded lower. So for me, it would be a slower formation because of the 15-minute. It takes 15 minutes to form every candle, but this would have been more than enough to not shake me out of the trade. Probably would consider taking some off or just moving the stop down. So your protected stop was up here. This retracement here, you could move your stop down to here. Once it broke here, you can move your stop down if you like, above here, above this fair value gap, or at this high, or your point of entry. And then once it broke below here, this bullish fair value gap, this is enough reason for you to like consider putting your stop up here, right? When you stop above this fair value gap here, or whatever your risk profile is, because this is also a breaker too. High, low, higher, high, and then look into here. Really, all of these candles here. Both of these down close candles in this case, and then the short here, the major short continued. So that's a retracement, retests, and then another retest into this bullish fair value gap here, and then it dropped. Was there news that day? No, it's not coming up. All right, so now I gotta go. All right, so that's that one is discontinued. Lower here, traded into this level here. All right, so it's no entry here yet. Technically, it's a turtle soup. You went down to another time frame, then you'll get it. But this is a small little bearish fair value gap here. Small, tiny one. You can risk it if you like, but it's fine. It's not like you're wrong to do that. Your risk parameters is up to you. So again, you're risking $200. This is a very tight range, like legitimately like a tight range. You're not like trading out of FOMO, losing money, whatever. So it's a legit short an opportunity, long opportunity, right? Probably leave this one alone. This looks like a consolidation. This is bearish one. So it's this one here that we're talking about. This swing low to this swing high and the pullback into this. Now it's an inverted bullish fair value gap, and it's below 50% of the range. So that's golden. want to be certain if that's okay. Oh, yes. Oh, that's a lot to say, but you have like so you have a momentum price leg, an impulse leg, A, A, B, then you have a retracement C, and then D, right? You have that. So this is technically like a return to origin, even though it came all the way back down here. It's kind of scary, but it's like a retest of this level, false breakout on this candle, reclaim here, another false breakout, and then ultimately a reclaim here. And we have a bullish fair value gap here if you wanted to entertain that or entertain this inverted fair value gap being reclaimed. You can do that as well. Then trading back into this bullish fair value gap. I don't know. Anyway, that's 30 minutes or so. It's a lot. I didn't really speak on the full long opportunity there. So yeah, that's all I got for now. I gotta go. Deuces.